Hi, welcome to EQD Research Global Insights for Thursday, March 18th. Today, we're going to take a look at a very short-term NDX spread from yesterday. Check in on the newly offered Russell 2000 Monday and Wednesday options, and check in on VIX, which continues to hover a little bit below 20. But before getting started, we are a few weeks into producing this show twice a week and are happy to see it gaining viewers and traffic. You can help us out by hitting the like button below, subscribe to our channel. Also, feel free to shoot me an email and suggest topics you'd like me to cover in this space every Tuesday and Thursday. So starting out with the NASDAQ 100, NDX under a little bit of pressure today, down 1.75% to 12,970. For the year, NDX is slightly positive, up about 0.6%. Vol Q today, up 2 points to 2674, which would be expected on a day where tech stocks are under pressure. Also, Vol Q remains at a relatively high premium when you compare it to VIX. We would also expect this based on both the NDX underperformance this year, but also the periodic displays of higher realized volatility that we've been seeing in the NASDAQ 100 relative to the S&P 500. Now, we've been focusing on short-term NDX option trading utilizing the Wednesday options. Usually, this is a 1 or 2 day trade. However, yesterday, with 40 minutes left in the trading day, somebody opened up a bull put spread using NDX options. The NASDAQ 100 was at 13,230. Traders sold the March 17th, 13,160 put for 753, and then purchased the 13,150 put for 638. This results in a credit of $1.15 for a risk of $8.85. The NASDAQ 100 did trade down a little bit over the final 40 minutes. The low was 13,169, just above the short strike. And we did finish the day at 13,202, safely above the short strike. Russell 2000 down only a couple of points to 2334, and the Russell 2000 volatility is up 33 cents to 29.75. Small cap stocks, they're the leader this year, up 18% in 2021. We do see the RVX at a relatively strong premium despite the outperformance of the Russell 2000. However, speaking to some smart volatility folks, feels like there might be some concerns about the domestic economy. Domestic economy has problems with maybe higher rates or inflation that could turn into a negative outcome for small cap stocks. Now, the SIBO folks launched Monday and Wednesday options on the Russell 2000 recently. We've been keeping a really close eye on these non-Friday expirations. And today, using the Monday, March 22nd RUT option, somebody put on a bear call spread. They sold the 2405 calls and bought the 2425 calls expiring next Monday. This resulted in a credit of 115 and a risk of 1885. This trade was executed with the Russell 2000 was around 2332. The short call strike's about 3% above where RUT was trading when the trade was executed. However, another price level to keep in mind, the intraday high for the Russell 2000 is 2360. It's also a level that the Russell 2000 has failed to breach a couple of times this week. If I were behind the trade, I think I would consider that price level, if it breaks through and kind of holds above an all-time high, is kind of a mental stop to maybe reassess that trade. And then finally, the S&P 500 is down about 0.2% midday. VIX was up 50 cents to 1975. VIX does remain below 20. The newly minted front month contract in April has a 23 handle. That's a function of us being on a 5-week expiration cycle. Plus, I think there are still a lot of market participants that are a little reluctant to put on short volatility positions, and at least without putting some sort of risk control mechanism in place. So an interesting ratio spread that hit the tape today could be considered bearish, might be considered bullish for VIX as well. It depends on where VIX ends up at April expiration, but with the future around 2310, trader bought 2 of the April 18 puts for 27 cents each, sold 1 of the April 21 puts for $1.45, took in a credit of 91 cents. If held to expiration, the worst case scenario is VIX at 18, which would result in a loss of 209. Over 21, the trade makes that 91-cent credit. And if we get a volatility crush below 16, this trade would actually start to make profits as well. So thanks for joining me for EQD Research Global Insights for March 18th. If you like what you heard and found it useful, again, hit that like button below. It helps us out an awful lot. Don't forget to subscribe, and we welcome comments and are open to suggestions on how to make this program more useful and informative. It could be a strategy, a market I haven't talked about yet. You can put things in the comment box below, or as always, send me an email at rhodes@eqderivatives.com.